Hi, my name is Emma Reid and I'm a Senior Solicitor in the Private Wealth and Tax team at Shepherd and Wedderburn. Nothing is more certain in life than death and taxes, a particularly uplifting quote from Benjamin Franklin. This, though, is very relevant when it comes to inheritance tax. The number one piece of advice that we give clients is that everyone should have a will, no matter what your personal or financial circumstances. Otherwise, it can be a gift to the taxman. Each person in the United Kingdom has a nil rate band of £325,000. On this amount, taking into account any relevant lifetime gifts, no inheritance tax is payable. The rate of inheritance tax is 40%, and this is charged on a person's chargeable estate. In some circumstances, this rate can vary, but that would be dependent on the structure of a person's will. In some circumstances, additional nil rate band may be available to an estate, such as the transferable nil rate band or the residence nil rate band. The availability of this is not universal, though, and is contingent on being married or in a civil partnership, and in relation to the residence nil rate band, having children. Various reliefs are available to help those with family businesses or agricultural enterprises. However, the various thresholds which currently exist are arguably not thought through with modern circumstances and family circumstances in mind. Married couples and those in civil partnerships are arguably treated far more favourably than those who are unmarried or those who do not have children. Many couples these days may be in long-term relationships, but may be unmarried and do not have children. In such circumstances, a number of the tax benefits that our system does provide do not apply to them. Married couples and those in civil partnerships with children and heritable property also benefit from some additional nil rate bands which may be available to their estate. These include the transferable nil rate band and also the residence nil rate band if their estates meet certain criteria. This can afford individuals or families an additional £350,000 of estate to pass before inheritance tax becomes payable. This is one of the more complex areas of inheritance tax law and arguably could be simplified. There is potentially scope to modernise our tax legislation to bring this more in line with modern society. However, in the meantime, there remains a number of tax planning opportunities for those whose circumstances do not fit the married with 2.4 children mould. There are still options for those in non-traditional partnerships, however professional advice is essential. Some of these options include trust structures or corporate structures. Another option may be philanthropic gifting. Lifetime gifting to individuals with 7 years survivance still often offers the most cost-effective and easiest ways of mitigating against potential inheritance tax liabilities on death. We have experience in advising many clients on options available to them, and often work with clients' existing financial advisors and other professionals in order to create bespoke advice particular to their needs and goals. If you would like further inheritance tax advice, please contact a member of the Private Wealth and Tax team at Shepherd and Wedderburn.